Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, 1st of October. First day of the month, final quarter of the year. And markets have started on a relatively positive note, actually. What we have seen is a decent gain on equity markets, actually. Decent bounce, actually, on S&P 500 into the close last night. Although off the highs, it was still sort of trying to break through recent resistance. And futures have sort of taken that on board and then moved again higher today. You've seen some moving around on the expectation or hope, or however you want to call it, of US fiscal stimulus. And the two sides are still talking. They're still some way apart, actually, about $600 billion apart. But the hope is that... certainly the market are taking it as a hope that they could come to some sort of agreement. I'm a little bit less positive than I think what seemingly the market is at the moment, but still it seems as though that markets are risk positive and taking that on board. We've also had some decent ADP numbers out yesterday, which really did help to sort of boost expectations, also for positive payrolls data on Friday. So some decent outlook coming out of the States there. We've had the PMI data starting to come through today for the manufacturing. First day of the month is the manufacturing PMI day, and what we've seen is Eurozone bang in line with the flash data, and UK just slightly down, but nothing too decisive. And then we're looking forward to that ISM number later on today, which is expected to be 56.4, so fairly decent improvement on 56.0, and PMI data expanding there on the last month, anyway, at least from August. So yeah, decent looking, decent data there from the US. But before that, we do have the core PCE, the Fed's preferred inflation measure, expected to tick slightly higher, actually, to 1.4%. Interesting that if that does come through. But yeah, just for now, the dollar is struggling a little bit. On the way to that improved risk appetite. You see that pretty much through all of these forex majors, with the two exceptions being the yen, which is obviously markets risk positive today, so the yen struggles there. But look at sterling, 85 pips down. Now, there's been an announcement that the EU are going to be contesting the UK Internal Markets Bill and the legality of it. And how that pans out certainly doesn't look as though it's helpful for the two sides coming to an agreement, but we'll see. Sterling not performing too well on the back of that, though, is it? So yeah, what we've seen is the dollar just sort of hovering effectively, shade lower today. Now, looking out to my chart of the day, which is the Kiwi dollar, as I said, risk positive. So what we see is the Kiwi dollar rising. We've actually seen the last few sessions market turning a little bit more risk positive, and hence we see the Kiwi breaking out. Now, 66 big figure pivot line since July. Really good one, actually. Numerous times 66 has been a pivot. Now, late last week and early this week, it was still a pivot of resistance, but you broke through that yesterday, and we've taken on board that as support today, the breakout, 66.02 is the low, and it's moved on. So breaking through that pivot, you would tend to say that it's now moving on to the next pivot, and the next pivot is arguably around 67.15. So that could be where we're going on to now, but you would actually argue in the last 3 months, given the fact that we've come back to 65 figure area as a basis of support 3 big times, and sort of you could argue that is a key floor, certainly a key floor now, but essentially we're trading range bound, aren't we? 67.95, so arguably about 300 pips of range there on the Kiwi dollar. Breaking through 66 big figure turns the market more positive within that range, and it's sort of reflected through the momentum indicators as well, swinging back higher on the stochastics. MACD lines potentially bottoming, RSI 50 and above. So it is turning more positive, and you've got upside potential towards the 60 mark on RSI. So yeah, 67.15 is your next real target, I would say. and you're looking to buy into weakness. You can see that through the hourly chart where you've been steadily forming high lows, high highs, moving averages turning more positive. RSI on the hourly consistently holding above 40, so little intraday corrections are a chance to buy. It certainly looks as though that the Kiwi dollar is moving on further. You've got the initial resistance today coming in at 66.45 area, then 66.85 being the 22nd of September high. But as I said, 67.15 is an old pivot through August, well, late July, August and September. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars and click to watch Trader Talks, our videos that give you top trading ideas.